SoFi stock, why this week will be insane. Please read the disclaimer. Hello, beautiful people. Shalom, moneymakers. So SoFi stock is sitting right now at $18.22. It went up 7.37% on Friday. SoFi stock is in a very interesting situation right now. From a technical standpoint, if we go to the technicals, you can see here for SoFi, the short-term moving averages, the 10, the 20, the 30, the 50, are giving us a buy signal here for SoFi stock. But the longer time frame, the 100 to 200, is still giving us a sell. The volume weighted average this is short-term moving average, so it's giving us a buy as well. Ichimoku base is always neutral. I've never seen it as a buy or a sell. And then if you look at the oscillators, some of them are neutral. Two are shorter term timeframes are buy, and one, the Williams percentage range, is at a sell. So very, very interesting, but more buys than sells right now here for SoFi. And we will be anticipating to see how SoFi stock can break out. If it can break out of the resistance level here at 1972, can it cross over on the 1348 EMA? But we do have, of course, the situation between the US and Iran. Right now, it seems that the peace deal, the prolonged ceasefire agreement, is, as the days go by, lower and lower probability. Iran has rejected US demand to hand over enriched uranium stockpile under any circumstances. According to the New York Times, US-Iran remain divided on four key issues preventing a final agreement: handing over enriched uranium stockpile, a proposed $300 billion reconstruction fund for Iran, release of frozen Iranian assets, and Iran wants sanctions relief on oil and petrochemicals. Iran says a formal agreement will only be announced once the issues are resolved. So right now, this is one of the issues of the market. The market was a lot happier once it learned that there's going to be a potential agreement. But now, if the agreement gets postponed or delayed or canceled altogether, it could affect the stock market. It could affect SoFi stock that has awakened a little bit. We've seen these retail stocks like SoFi, Palantir, Reddit, similar to that, Robinhood, that suddenly got a few days of big movements. And the question is are these movements going to continue next week, or is it just a bull trap and we'll see things pull back a little bit? As always, I don't know what exactly is going to happen. We'll find out during the week. As always, don't forget that this video is for educational purposes, for entertainment purposes only, not financial advice. Always do your own due diligence before you decide to invest. By the way, if you haven't yet subscribed to the channel for more SoFi stock updates and general stock updates, now is the time to do so. We also have a free and open Telegram group if you're interested in joining that as well. So what's happening this week? On Monday, we have the ISM manufacturing PMI data, which can usually give us a good indication of what's potentially going to come. It gives us a little bit of an indication how manufacturers are doing in the US. Anything that is over 50 is considered pretty good. It has been over 50 for a few months, so we'll see if that continues. JOLTS job opening data on Tuesday, that could be interesting for the market. Then the initial jobless claims on Thursday. And we have May jobs reports. Also, a total of 7 Fed speaker events this week. This week will be all about the labor market. Right now, the probabilities of the new Fed, Kevin Warsh, reducing interest rates are at 0. Right? So these job reports that are going to come out are going to tell us, okay, inflation might be high, but there's a chance that if oil drops, inflation can come down in the next 6 months. But if the job market is still poor, then that's a double whammy, and you can't have high inflation and bad job market because if you start reducing interest rates and there's good job market, I mixed that up. You don't want high inflation and good jobs, right? You either want high inflation and bad jobs or low inflation and good jobs, because if you have high inflation and good jobs, people have lots of money because they're working, they're going to spend more. And then if they're spending, producers have no interest, retail has no interest. I'm talking about not retail, people that are buying stocks, but, Walmart and retail, right? They have no real reason to reduce prices if people keep buying. And so inflation keeps going up. That's usually what happens. So we're going to have to watch the job reports, see what could potentially happen this week, and it could affect the whole market in general and SoFi stock as well. Now, before we continue, I wanted to try something out. Today you got to use AI in order to help you out with your trading. So I went to uh, ChatGPT in this case. You can go to any AI you want. There's a lot of videos out there, connecting Claude and to TradingView and things like that. I actually want to get into that more deep in the next few weeks. But right now, I asked ChatGPT here to act like a senior Wall Street equity research analyst, analyze SoFi stock, right? And look what are the good, the bad, and the ugly. So, as a senior equity research analyst, I would classify stock as one of the most interesting and controversial growth stories in fintech today. Investment thesis: the market is no longer valuing SoFi as just a student loan company. The real debate is whether SoFi becomes a large digital bank, a fintech infrastructure company, a crypto payments platform, or all the three simultaneously. If management executes, the stock could justify a significantly higher valuation over the next 3 to 5 years. If execution slips, the valuation can compress quickly because expectations are now elevated. What Wall Street is missing? Most investors still focus on lending. I think the bigger story here is the ecosystem. SoFi now has banking, investing, credit cards, personal loans, student loans, mortgages, Galileo, Technisys, crypto infrastructure, stablecoins. The goal is to become a financial super app. And this is from just last week. We got that stablecoin news was one of the reasons why we saw SoFi jump there. The bull case, revenue growth that remains exponential. Quarter one 2026 reached approximately 1.1 billion, growing more than 40% year over year, while profitability continued improving. Management reaffirmed aggressive 2026 targets. This is important because many fintechs can now grow. Very few can grow while becoming meaningfully profitable. That's the problem of a lot of companies, that they can't become profitable. Bank deposits are becoming a huge advantage. SoFi now has their bank charter. That changes everything. Instead of relying heavily on expensive external funding, SoFi can gather deposits and lend against them. This creates better margin, more control, more earning leverage. This is one of the reasons why CEO Anthony Noto keeps emphasizing becoming a US top financial institutions. And stablecoins could be a major catalyst. The most important new development is SoFi USD. SoFi recently made its stablecoin available directly to its 15 million users and became the first US national bank offering a stablecoin to a public blockchain. If management succeeds, this could unlock cross-border payments, tokenized deposits, blockchain settlements, new fee revenue, higher customer agreement. The market only beginning to understand this opportunity, and Galileo is the hidden asset. Many investors forget SoFi owns Galileo. Galileo powers fintech infrastructure behind many financial applications. If fintech activity accelerates again, Galileo could become much larger earning contributor. Sorry, this segment has recently faced challenges after losing a major client, but long-term potential remains significant. Now let's talk a little bit about the bad things. Okay, valuation is no longer cheap here for SoFi. This is not a value stock anymore. The market is already pricing in substantial future growth. Several analysts argue that current valuation assumes a large amount of future success. If growth slows down, the stock could re-rate lower. Credit risk: at the end of the day, SoFi still lends money. If unemployment rises, consumer spending weakens, recession fears increase, which we talked about before, investors will worry about loan performance. This remains one of the biggest risks. Technology platform weakness: Galileo and Technisys remain important, but the segment recently lost major customers and profitability weakens. Okay. And regulatory risk. The stablecoin opportunity is exciting, but regulation can change quickly. Any shift in Washington approach to crypto or stablecoins would affect SoFi's strategy. And so it's going to be very interesting to see what is happening. The analysis of ChatGPT here is outperform, high risk, long thesis positive. Primary reason: SoFi is evolving from lender into diversified fintech ecosystem with banking infrastructure and blockchain exposure. The biggest upside scenario is not SoFi becoming a better bank. The biggest scenario is that it becomes a financial operating system where banking, payments, investing, lending, and blockchain service all sit inside one platform. Okay. Now, as they also ChatGPT here approved before that, what could be the catalyst for just this week, right? So it said SoFi recently reported their first earnings. What we're going to be seeing is how the market continues to process the earnings. Key numbers continue to focus on the 30% expected revenue growth in 2026, the 60 cents adjusted EPS target, continued member growth and expanding profit margins, the launch of the stablecoin, which we touched on, and growth of Galileo and Technisys, which we talked about as well, and potential analyst upgrade or price target changes. SoFi tends to react strong when Wall Street changes its outlook and becomes stock remains highly debated. Bullish analysts are pointing to record profitability, deposit growth, cross-selling success, expanding banking products, where bears remain concerned about valuation and lending risk cycles. So, and what and most investors are hoping for is a short squeeze, unless you're short, and then you don't want a short squeeze, right? SoFi has historically attracted both strong bulls and short sellers. After their earlier muddy waters short report, sentiment became very negative. If the stock continues to hold support and receives positive new flow, some traders could be forced to cover positions, creating additional upside volatility. What to look for this week? Any analyst upgrade, new news about SoFi, USD, or crypto products, member growth or deposit growth commentary, technical breakout above recent resistance levels, broader market reaction to interest rate expectations. Sorry. And so right now we have all of that catalyst for this week and for long term here for SoFi, and it will be very interesting. Some people in the comment section of previous videos have talked about, I invested in SoFi and I bought it 32 and now it's at 18. And, the semiconductors and the memory stocks and all that were running up and I'm down. And this is possibility. Whenever you invest in a stock, there's always a possibility that it starts going down. Some people on the flip side bought it 6, bought it 7, bought it 4, right? So they're still up significantly. It's all about timing. It's all about, doing your risk versus reward kind of ratio. Some people will dollar cost average all the way up or the dollar cost average all the way down. You have to find what's the best tactic for you. And of course, you're going to make mistakes as in early investors. It takes even maybe 10 years, 15 years until you figure out what's good for you. Not all markets are created equal. Right now, every single broom is hitting, right? It's a saying, meaning that when you have a market like the stock market right now, where many, many stocks are going up and they're going up significantly, everybody thinks they're an expert trader, expert investor. This happened similar in 2021 when a lot of 2021, a lot of new investors came into the stock market when it was running up after the COVID sell-off, and they were just making big gains, and they thought, oh, this is so easy. Every single stock I get, it's doing amazing. The problem with that was that when the market started selling off, they didn't know what to do. They overreacted. They sold for a loss, or they overexposed themselves with options and things like that, and they lost everything. And so that, I think it's the worst time to start getting into the market is when everything is good, right? If you get into the market when it's like good and then bad, and right, so you learn all of the cycles, you learn everything, you experience everything, and so that's a problem, right? "Quote unquote" problem that we have right now. A lot of these stocks have been going up significantly, and people are very, very euphoric. And that's why I think it takes about 10, 15 years until you kind of find your groove, because you need to experience lots of things in the market in order to start running. Of course, there's going to be people that are successful straight off, but they're going to make mistakes too. They might be very profitable, but they make mistakes. So again, this is just my opinion. This is what I've experienced. Maybe your experience is going to be different, but if you're interested in joining the journey in the stock market with us, subscribe to the channel for more daily stock updates. Drop a comment, smash the like button. Thank you for watching. I hope to see you next time. And like I always say, let's make a lot of money.